If you're interested in taking this capital raising business up to the next level, maybe to a point of being a full-time job, a full-time profession, in this upcoming episode, I'm going to introduce you to somebody who raises capital for a living. So if you're ready for the big leagues, pay attention to this upcoming episode. Let's go! Hey gang, how's it going? Russell Westcott here. Make sure you subscribe to this channel and hit that bell notification to not miss an upcoming video. In this upcoming video, I go one-on-one in the home studio here with Justin Smith with Hawkeye Wealth. Justin is a wonderful resource and he is a professional capital raiser. We talk about what it takes to be able to raise capital at scale. We talk about how do you get started. We talk about how do you develop the key mindset in order to raise capital from other people. Justin and I nerd out and go heavy into the topic of raising capital. So if you're struggling to find where the money is going to come for your next deal, even if you're just getting started and you haven't even raised your first dollar, there is something for everybody in this upcoming video. All right, let's just get after it. Please help me welcome Mr. Justin Smith. All right, guys, Russell Westcott once again back here in the studio. Got a cool interview lined up for you. I guess the easiest way to describe it is I am having a conversation with a professional money raiser. You get paid to raise capital, do you not, Justin?
Yes, sir.
So we're going to dive into more of that conversation here shortly. But first and foremost, everyone, please welcome to the interview, the Raising Capital interview series. This is Justin Smith, everybody. Justin.
Thank you for having me.
Good to see you. Okay, we're going to get really serious here. We have lots of fun, and so everyone, if you are watching these interviews, we do have lots of fun, and we go deep into certain conversations. But I always like to start things with some context and giving some people that are going to be watching this a little bit of context about where you come from. I don't know your whole backstory. I actually know who you are and what you do, and I've been a fan from afar, and every time I've ever run into you, Justin, you've just been so professional, and you're just so buttoned down, and quite frankly, I might need to get my coat on here just to keep up with this guy. But he's I've seen you evolve, and I've seen you grow, and I've seen just some of the things that you've done is just tremendous. And you're actually on the verge of launching a brand new business venture, and we will talk about that as well. But that's a long way of saying, maybe for the people watching, if you could just give us a little bit of the Coles Notes version about who you are and where you've come from, and maybe some of your experience within real estate.
Yeah. I've been in the industry now for about 7 years, and
so you started when you were 19, right? Right?
Yeah. I shave once a year, and if I look older than 20, it doesn't have to grow back, but I've had to grow it back every year. No, I've been in the industry now for 7 years. Have enjoyed many ups and a few downs that I've certainly learned from here. It's been some challenges along the way. I remember when I first got into the business about 7 years ago, I went to a real estate conference and there were about upwards of 700 people in the room. And I just remember being blown away about how a conference about real estate could attract that many people. It was a new industry for me. I had done some investing in the past through my college years. I'd always enjoyed it. But I just remember just being blown away. So I started to ask a few more questions about this investing in real estate, and shortly afterwards, I met the person that I would begin to work with, raising capital. Nice. So that was in 2011, and made the jump. I had a job at the time, the career, and as you said, I'm paid to raise capital, and if I don't raise capital,
you eat what you kill. In essence,
it's very much a
sorry for the graphic view there, everybody.
Yeah. No, I remember getting into this for the first 6 months. It was a struggle. My wife was working full time. She was, for the most part, paying the bills, and I was really learning this business and at least trying to. I had just gotten the new freedom of working from home. That comes with its own difficulties for those.
Challenges, yes.
Yes. If you're used to having someone telling you, what to do, well, nobody telling you what to do. Netflix had just come out at the time as well.
Yes, you watched all the Breaking Bad episodes, and
because you got to go watch a few more before you can go make any calls or anything.
And then at the end of an episode, it says starting in 3 seconds, the next episode.
Yeah. How are you supposed to raise money when you haven't watched that next episode, right? So there was a challenge with it. You you get into this business, you're in the job of raising capital, and you confront some fears. And I remember about 6 months into it, my wife, we were driving down Highway 1, and she looks at me, she's like, Justin, you got to get a job. And I was just sitting there thinking, I'm like,
the death of an entrepreneur.
Yeah, I was like, I don't want to go back to do that, but she's got a point. If you're not getting the results and you're not getting the job done, she has a point. So I said, okay, honey, I'll make $10,000 this month. If I don't make $10,000 in commissions this month, I'll go and get a job. And immediately she says, okay,
right,
no problem. And I start thinking, okay, well, I probably didn't need to say 10,000. I probably could have said a lesser amount and gotten by. But you get to work. You start doing some of the things that are required to do to raise money in this business, and ended up making $10,035 that month.
Oh,
so, yeah, but
stay of execution. The governor phoned to get your execution orders signed.
Yes, about $35 away from not sitting down here with you today. So really, I got the start there and have been growing it ever since. About 4 months later, she quit her job and began working with me in the business here, and really haven't looked back.
So this stuff works.
It does.
Yeah. And I know it's a different context. Now, guys, Justin's a professional in the realm, and we're going to talk more about this whole thing. So a lot of people going to be watching this might not even know that, geez, there are resources like a Justin Smith. There are professionals that are, I can pay you to go out and raise my capital for me. And we'll talk more about that. And a lot of people will be watching this may not get this. So we're going to talk, this is going to be a little bit of an advanced conversation, which is totally fine. It's one of my commitments in the Raising Capital Academy is actually there's going to be a lot of people in this program that are actually ready to scale. They've maybe have got past the starting. They've maybe even got 100 places under their belt. Now they're looking to take the next step is now how do I go into public capital? How do I raise things on a professional basis into a larger project? So that's the conversation that we're going to have. But before we get there, I'd be remiss if I didn't ask you some of how you personally go raise capital, right? Because I honestly think whether you're raising 100,000 or whether you're raising $1 million or whether you're raising 10 million, the process is similar. It's just different number of zeros in certain respects, right? There might be a different level of people you're talking to. There might be different documents you have to sign. There might be some different securities and regulations that you have to adhere to, but it is a skill that we all can learn. So before we get to that, so you raise capital from people all the time. Most people that I talk to, real estate investors, have a fear around talking to other people about money and talking to other people about raising money from other people. So you've had to get over that fear, obviously, or else we wouldn't be talking today. So what would you tell to somebody if I'm sitting here and say, Justin, I'm scared. I have a fear around bringing the money conversation up with people. How do you get past that?
Yeah, and not everyone's an extrovert either.
Yes.
There are people that are very good at the investing side, and they may be brilliant at it, in fact, but they may not be extroverts. They may not naturally tend towards going and raising money from people, because raising money it's a people business, and I think the good news is I'm a little bit more in the middle of the spectrum. I'm not incredibly extroverted. I'm actually, but I tend to be a little bit more towards the introverted side. So I think the good news is for the good news is for a lot of people, I believe it's very doable, and I think there are actually traits of some introverts that could give you some advantages as well. So whether you're an introvert or an extrovert, I think you can raise money in this business, and I think that's good to know and important to know for many people.
So anybody can. It doesn't require anything special. Quite frankly, if you knew both of us, you go, definitely don't require anything special, right? Yeah. So the fear, it's real.
Yes,
right?
Yes, it is.
How did you get over it? And number two, how would you coach me if I told you I'm scared to do that?
Yeah, well, it's like you say, it's a learned trait here, and I follow a few different thoughts that have really helped me get through that. Number one, we're in the business of connecting with people. I think a lot of the times people see people, they meet someone and they say, hey, how am I going to get this $100,000, $200,000 check from this person? And that's not the business. You're in the business of connecting with another human being.
Yep.
And certainly that connection needs to be your primary focus when you first meet someone. It doesn't need to be, you're not going to get from A to Z in the first conversation.
Yes.
That this trust takes time. And I think a lot of the times people rationally, they get that, but emotionally when they know, you're like, oh, I'm talking to Russell, I need to come away with some money from Russell.
Yep.
That emotionally, the conversation, it changes. It might give, those fears might arise a little bit more. But if you're just looking to connect with someone, and if you connect, there's a trust, you start to have a little bit more of a dialogue. I can get to know, if it were you, Russell, I can get to know you a little bit better, and whether my products may be a fit for you, maybe they're not. And if they're not, that's okay. But we don't get to have that conversation unless we've made a connection. Oh. So I think
time out for 1 second. You guys just see how nice and smooth he is? He's making a connection right now, and he's just smoothly, answering and alleviating my fear and stuff like that. That is a trained skill. And you've honed that over the years, have you not, of having many of these conversations?
Well, you realize what works and what doesn't work.
Yeah, I'm almost sitting here ready to write a check, almost.
No, I think some people think that you're naturally born with this, and you're not.
Yeah.
You go and you had a lot of conversations. You've had some pretty awkward ones, and some that go a little bit better, and you learn little bits along the way. So again, it's about human connection, and at the end of that, you learn at the end, especially if that first conversation, that you don't need to go for the jugular and show them your deal. It doesn't have to happen like that. You can say, one that I've done often is, I do a lot of deals here, and I like to keep people in the loop on the deals I'm doing. Would you like to be kept in the loop on the deals I'm doing?
Guys, I hope you wrote that one down. That's brilliant. Absolutely brilliant.
It's a conversation that's really easy to have, and most people will say yes to that. And that's basically permission to put
it's a shy yes. It's a shy yes
on your email database, and it at least plugs them into your system, and then there becomes a question of the follow up and what's the next step for that. But it starts with being able to connect with someone and have, for a lot of people, it's just some kind of soft close at that first one. You're not going A to Z conversation one. So that's
connection, and then would you like to be kept in the loop of the deals that I'm doing?
Yeah, and you can get creative here. There's a lot of different closes that you could have on that first conversation, but you're not, don't go in thinking that you're making a big ask, or just remind yourself that you're not making a big ask. You're just meeting somebody.
You're taking a genuine interest on another person.
Yes.
Right? And finding out if you can help them.
Yeah. And that's number two. It's value.
Yeah.
Are you able to add value to this person? And value comes in a couple of different, I mean that in a couple of different ways. Mm-hmm. Number one, whatever project you're raising money for, is it a valuable product? So you got the product question. Yeah. Are you raising money for a good product? And if you're not, and you don't feel like you're adding value to that person's life by introducing them to a good deal, then you need to change your deal. You can't go in and have an honest connection and feel like you're adding value to a human being if you don't believe fully in your
would you put your own money, or would you put your mother's money into it?
That is a great litmus test for whether you believe in it, and I do. I invest. I eat a lot of my own cooking that way, and it's a great way to gain perspective into the investor paradigm too. The way they see you, and there's no better way to do that than to put yourself in their shoes and be an investor in the deals that you're doing. So that's number two, is make sure you're adding value, and know that you add value. Mm-hmm. It's not just the value around the product; it's the value of what you bring to the table. And for some people, it's a confidence or belief in themselves issue. And if that's the issue, if it's not the product, if it's the value that you believe you bring to the table, there's probably some different things that you can do to know that you can do this, that you can bring value to the table. So the first is connection. The second is this conversation around value, and the third is context. Because you talk about fears around having money conversations. Well, let's say you're at an investment conference, and everybody's talking about money, and you can talk about other things. You can talk about dogs. You can talk about other people's interests, but you're at a money conference.
Yeah. So it's actually it's already one level of filter already for people that have showed up, already know what they're getting into.
It's okay to talk about money. In fact, it's kind of weird if you don't talk about money in that context, right? So you can create those contexts. And again, when you meet someone and you make a connection, maybe you don't want to talk about money as much on that first conversation. Often I don't. I'll have an hour-long conversation and talk maybe 1 minute or less about money during that conversation. And then what you do is, if let's say you have a follow-up event, you have a webinar, or you have a follow-up presentation, you can say, hey, I'm doing this. Would this be the kind of event that would, interest you? And if they say yes, well, you bring them to the event. They know you're going to talk about money at the event. You're creating a context that makes it a very appropriate place to be talking about money.
Now you're talking like a step of qualification almost.
Yeah.
Right. So I'm slow and I always have to recap things. So the first one was connection.
Correct.
Then add value.
Yes.
Then context, CVC, and then the next one is what was the next one? Was the qualification almost, right? Nice.
Yeah, and really at the what we're in is we're in the people business. Yep. If you connect with someone, if you add value to that person, and you create an environment or a context that allows you to have that conversation, you will raise money.
Wow. So holy moly, you said a lot there. I'm just going to unpack it a little bit. So if you really think about it, really the best way to get over the fear is stop thinking about yourself. Right, that's really the reason why most people have fear, is because they're thinking about, what are they going to think of me? This is awkward, and they have it's all an internal focus on themselves. If you actually focus on how can you make a connection with them, how can you provide value to them, how can you set the environment for them to win, and then how can you prescribe something that works with them. Every one of those 4 steps you talked about was 100% focused on them.
Yes.
No fear when you're trying to help another person.
Correct. And I know a lot of people that think that if you meet someone and your ultimate goal is to have a check written from them, isn't that disingenuous? Mm-hmm. Where you're not just meeting them for the sake of meeting them. And I think it's important to realize that you are meeting them for the sake of meeting them. And as you get to know them, if you can add value to their life through the fact that you do these real estate investments, then all the better. If you can't, that's okay.
Yeah. And it comes down to intention. Really, at the bottom line is, if you really want to talk about, and there's been some studies out there that I've seen, these studies that people have had scripts to read, like a sales script on the telephone, and they had different intentions. One person's intention was they must make a sale. The other person's intention was they had to help somebody. Same words, read the exact same way. The only thing different was their intention. Take a guess who had better close ratios.
Not too hard of a question.
Yeah, the one with that had the intention of helping people had a better close ratio, bar none. So it really just boils down to your intention of helping somebody else. So to your best knowledge right now, and I'm just talking rough numbers, how much capital have you, give or take, have you raised?
That's a difficult question to ask. Some you raised directly, some you raised indirectly. Mm-hmm. I got my start helping people get involved directly in properties in Northeast BC. Yep. So it was a little bit more of an indirect raise, but directly and indirectly, it's in the tens of millions. Tens of millions.
Nice. So, and the reason I asked this is part of this interview series. I'm actually I'm roughly quasi adding this up to give people a perspective of what it is, and we're now over 100 million in the people who I've interviewed so far of capital raised. So that's really the context. There's no judgment of the number one way or the other. And quite honestly, I think you're just getting started, which we will talk about your brand new business venture, Hawkeye Investments?
Hawkeye
Wealth. So very cool. The company you got your first start with was Western Canadian Properties Group?
Yes, Western Canadian Properties Group and Western Wealth Capital.
Some fantastic things they've done.
Yes.
Wow, I'm just blown away. Actually, Dave, I'm just trying to coordinate with Dave Steele about getting him on this interview as well, about of getting his insights to this as well. So, you invest in in properties yourself?
Correct.
You probably have a portfolio of properties, plus you also invest in the funds, I would imagine.
Yes, sir.
As you mentioned before. And I think that's important, right? That would be important from the standpoint of, you could tell somebody, look, I actually got the first shares of this as well.
Yeah.
And we have some mutual friends where you're just raising capital for Derek Peaver and the whole there as well. Derek is part of this program as well. Check out that interview as well. Okay, so now I want to talk about a little bit about public raising of money. Like, everybody sits there and they go, well, I want to put it out on a web page or Facebook, or I want to host an event and I'm going to go out to the public and raise some capital. You can actually get yourself into some hot water doing that, can you not? Because there are some rules and some people governance and people that have gone through the process like you that have, have a little bit of, I have a little exception to somebody just going doing that in the public as well. So what are some pitfalls that can happen with a person just going into the general public of raising capital?
Yeah, it usually revolves around just a lack of clarity or a lack of information around what you can or you can't do. And one thing that I can't recommend highly enough is to go and get yourself a good securities lawyer or some consultant that is very experienced in this industry before you go and launch into any public raising of capital. Yeah. If you go and you raise and you go offside in any way, shape, or form, it's going to come back and to bite you big time. And I know securities lawyers can be a little bit pricey, $200, $300, $400, $500, seen as high as $600 an hour. And that might sound like a lot of money, but if you go offside significantly with the Securities Commission, the mental anguish and cost of that and downtime that can often come as a result of going offside is it can be massive. So go and get yourself a good securities lawyer. Right. And if you're really hesitant to spend the money right away on the securities lawyer, find somebody who's done this before and make that your first step. And they're going to tell you the same thing. They're going to go tell you to get a securities lawyer and make sure you're taken care of as well. But at least maybe some of those initial questions, you can get them at a little bit better than a $600 an hour rate and get that information because some of that's widely available out there from consultants or maybe friends in the business.
And we're going to dive into the deeper end of the public raising of funds. But before we do there, let's maybe just take a step back. So if somebody's watching this going, geez, I have no intention of going into the public realm and raising capital that way. And I know I'm cool with just family and friends and business associates and just people that I know in my network and friends of theirs and people that I've just, that's those two circles, right? Close family and then business associates of friends, in essence. Does somebody have to be worried about raising capital in that realm of people?
Yeah, I think it's worth a conversation with a lawyer, regardless of how you're doing it. There's even rules and regulations around how to properly raise funds from friends and family, certain documentation that needs to be done, and you should dot your I's and cross your T's. If you're raising capital in any way, shape, or form, I don't care if it's as a joint venture or as a limited partnership
or a loan
or even loans. It is worth getting some advice.
Right. So in essence, it's like going to get a checkup before you actually go train to run a marathon, just to make sure the old ticker is good and you're in actually good health and you're actually going down the right path of that too. So it makes sense to do that, right?
The consequences of going offside are too big.
Wow. So this is Justin Smith, and we're actually just getting started. I'm just going to go and reset the cameras here very shortly, and we're going to take a big dive into a couple things. We're going to talk about family and friends and just those few documents that people just probably need to get signed. We'll just talk a few of those, and then we're actually going to get right into the deep end with our water wings on, and we're going to talk about some public raising of capital. And then after that, we're actually going to talk about what an exempt market dealer who you are, how you can help real estate investors. So we'll be right back, guys. All right, everybody, welcome back. We just got everything all set up, and as you can tell, I put my coat on, just trying to keep up with the sharpness factor that's in the studio here today. Now, remiss to say, we definitely need to talk about one thing before we actually go into this next conversation. And, it's like one of those lawyers or accountants getting up on stage and their first slide's a disclaimer, right? So we're going to put a little bit of a disclaimer on this, and you can fill in if I miss any things. At the end of the day, guys, we're not, this is information only. We're not your professional counsel. Your defense is not Russell and Justin said this on a video, so that's my defense of why I did what I did, right? Because really at the end of the day, you need to get professional advice and you need to get legal advice with all of this. So would you like to add a little to that as well?
Everyone's situation is unique, and raising capital, and I'm going to speak specifically to raising capital in British Columbia, technically what the answer is you have to be registered to offer any security in British Columbia. And now there are certain exemptions to registration requirements, and everyone has to know whether they fit the box in any of these exemptions or not, because technically you have to be registered. So unless you fall under one of these exemptions, and there are some exemptions out there here in Western Canada. As of 2018, we have what's called the Northwest exemption that you may or may not fit into that box. But it's very important that, again, like I say, everyone's situation is different. If you are relying on an exemption, it's extremely important that you know without a doubt that you're able to rely on that exemption.
Now, also the other disclaimer I'm going to add in here as well is, guys, don't get freaked out, right? It's what we're really talking about is if you think about it, we're talking about a seat belt and getting into the car to go drive, right? We're talking about the protection. Your intention is not to get ever, busted or in an accident or in that kind of stuff, but it's nice if you had your seat belt on. We're not here to freak everybody out the same time, because there's kind of a fine line, right? There's some people go too far. Well, I don't have all my, I don't know everything about securities, and I'm scared, and what am I going to do if I get this, that, or the other? So really, we're not here to freak you out, and we're also here not to give you a specific legal advice as well.
Yeah. With the right advice, you can navigate this. It's not impossible to do by any means. I mean,
right.
Didn't know how to do this, and I know a little bit more than I knew yesterday now.
And sometimes, and some of this, people may never ever encounter any of this kind of stuff that we're talking about too. Maybe you just never know, right?
A lot of the times where the issues arise around the Securities Commission is when you have complaints or when things go wrong. That's really when you know whether you were doing things right or not. So really, your first line of protection is doing good deals.
Right. Yeah, that makes sense.
So we spend at Hawkeye, we spend a disproportionate amount of time figuring that part out, because again, the best contracts out there are the ones that offer clarity, but you don't really ever need them. Because you usually need them when something's gone wrong, and you have to have something enforced, and the idea is to build enough clarity from the get-go and create good enough products that the chances of having to go down this avenue of having troubles with the Securities Commission is pretty minimal.
So do good deals. Do what you say you're going to do, obviously. And the other is, if you really think about it, is don't publicly advertise you're looking for investment out in Facebooks and, Eventbrite and all the kind of stuff out in the world. If you don't publicly put it out there that you're looking for capital, and it's all people you meet, business associates, family, friends, different things like that, you potentially might not ever have any issues whatsoever.
Yeah, it's for each person's situation is different, but you can do this the right way. It's not the most complex thing in the world. So go find out what your personal situation is. If whether you need to get registered or there's an exemption that you can rely on. If you can rely on an exemption, go find out the few I's that you need to dot and T's that you need to cross, and operate accordingly.
Well, let's talk about these exemptions. I've interviewed a few other people along the way, and we talked about exemptions. And you live in this world, so you probably have this off the top of your head just like this, or it's totally fine if you don't have exactly every single one of them. But what would be some of the exemptions that people could fall within, and maybe from the top down to the bottom?
Yeah, there's a number of them. Now, in general, in the private market space, it's called the exempt market space. You tend to have a little bit less disclosure than you have less disclosure than publicly traded companies. And because of that, the BC Securities Commission sets out rules and regulations as to what appropriate disclosure is required to have an investor come in. So you've got a couple of different categories of investors. You may have heard the term accredited.
Yep, accredited, eligibles, different things like that.
Yes.
Unicorns.
Yes. The funny part is each province has their own set of rules as well. So there's a governing body over each of them, and the rules aren't the same. The rules in BC aren't the same as the rules in Ontario. So if you're going to be raising money in different provinces, it's also important to know the specific rules of that province. Here in BC, you have what's called an accredited investor exemption, which means that you're able to raise funds from people if they meet one of the criteria. Now, you don't have to meet all of them. The criteria, most common criteria, are one of three.
Yep.
Either they make 200,000 plus per year.
Yep.
Or 300,000 combined with a spouse.
There's a couple. Yep.
Yeah, they have $1 million in net financial assets. Now that's considered cash, securities, or a life insurance policy with a cash surrender value.
Okay.
So a lot of people mistake this as 1 million in net worth. It's not the case. It doesn't count your own principal residence, and it doesn't count other real estate that you own.
And does it count, say, an asset of a business asset as well, or does it count that as well? Like an equity value of a book of business that you might have, or something like that.
Yeah, it gets even to be a little bit more of a gray area as to what counts. It's, at the end of the day, what they're looking for is liquidity, and they want investors that are able to take a hit if things were to go wrong in that deal. So really, that's what it's a question of. The question of liquidity, and then the third is a net worth component of $5+ million. So you don't have to meet all three of these criteria, but usually accredited investors will meet one of those. There are a few other criteria as well that you may meet, but a smaller group of people will meet those criteria. So you can go online and find out what that criteria is at the Securities Commission website.
So at the Securities Commission. So if you just Google Security Commission website.
They go to BCSC.
And then what would I be looking for there would be investor eligibility.
Yeah. I'd go to accredited investor definition. Okay. So if you're less disclosure is required to work with accredited investors, because the government, or the BC Securities Commission, has said that because these people they have a good income, they have good liquidity or a high net worth, they tend to be a little bit more sophisticated and can do their own due diligence to a higher degree than someone that may not have gotten to that level financially. And number two, in addition to being sophisticated, they can afford to take a financial hit.
Yes, that's the big thing, right?
So they don't require as much disclosure.
So really, if you think about it, is how much if things went sideways and things went bad, how much pain would it cause the investor? Really is so if it's the last $100,000 of somebody, that's going to cause a little bit of grief and anxiety versus somebody that's just a minor speed bump. In their net worth,
and that's the way to do business, anyways. In this business, these tend to be less liquid investments. You're not able to get out of them whenever you want. That's pretty generally true of this category. And as a person, I always remember back in the day, I heard this line, and I repeated it many times afterwards because I thought it was true. They say, nobody cares about your money as much as you care about your money. You've probably heard that, and I get where they're coming. I get where people are coming from. It's pay attention to your money, and that's good advice. And they just know what's going on. But I realized it. I remember back when I was finishing up my master's program here in town, and I got a hot stock tip. Russell.
No, of course you did. Of course you did.
I got a hot stock tip, and wow, I wish I would have found real estate earlier, Russell. I got a hot stock tip, and I invest, and I used a line of credit. I used a line of credit to invest, of course, as a poor student. That's what I had access to, and I can't remember how much money I put in, maybe $2,000 or $4,000, but I watched that $4,000 turn into $6,000, $8,000, and it gets to the point where I was just recently married. I had to talk to my wife, and I say, Elaine,
we're rich.
No. It's time to double down.
Oh, yeah,
it's time to double down, and so if we put it, I think we were in the neighborhood of $20,000 on a line of credit at the time, which at the time was pretty significant amount of money for us as poor students, and it keeps on going up, and I think it reached about $40,000, and then it slowly starts to unwind, and you lose. You're like, oh no, don't worry, honey, it's coming back. And I remember when I sold, I'd lost about 80% of my money. And sorry, not my money, the bank's money.
Of course, yes.
Yeah, the banks.
They're okay. They'll forgive it. Of course, right?
Totally, that's how they work. And along the way, that hurt. That hurt, and I learned a lot of lessons from that. But I'd also introduced this stock tip to a friend.
Oh, yes.
and this friend had invested a little bit of RSP money. I think he told me it was somewhere around the neighborhood of $2,000 to $3,000 in this stock, and lost the majority of it. I don't even know if he ended up selling it or not, but the company did go bankrupt. So again, I thought, I just felt awful. I felt awful that I had suggested, or I'd even brought it up in conversation, that this might be a good idea to do this. And here he is, he's lost $2,000 or $3,000. He's a lot further along in his career. $2,000 or $3,000 didn't mean near as much as $2,000 or $3,000 to me. And I'd lost close to $20,000 on this deal, and it didn't hurt near as much as his $2,000 to $3,000.
Yeah, by you, it hurt more by recommending and somebody else losing the money than your own money.
It's awful.
In essence,
it's awful.
Yeah.
So back to the Securities Commission part. These are the rules or the requirements here. But we take upon ourselves a pretty serious responsibility to help people to make sure we do the best to protect their capital and earn a reasonable rate of return on it. So I think if you're as a general rule, well, you do have to make sure you're following the guidelines as a general principle. Do right by people. If it's not a fit for them, and it's especially tough in a business where, like, what was it, you eat what you kill, where you're 100% commissioned to not do it because it's the right thing to do. But it's important that you do that, because if you're not, I find a lot of the times that the people that get into trouble are the ones that they really need that money. They need it, and they need it so bad that they're willing to put somebody else's money at greater jeopardy, or maybe not be as transparent as they should in the transaction. And they think that their problem is they need to get this person's money, and that's not their problem. Their problem, Ross, is they're having a conversation with maybe 1, 2, or 3 people, but they need to have a bucket full of 50, 60, 70 leads. You've got a marketing problem, because if you go and you're doing that part right, and you're having conversations with enough people, if it's not a fit, let's say something's not a fit for you, Russ, well, maybe it's a fit for John, or maybe it's a fit for Sue. And I find that more often than not, where you get into the compliance problems is where you're not getting that marketing part and that lead funnel figured out properly. If you are, it really allows you to go and allows you to afford financially to be able to do the right thing.
Okay. Wow. There's just so many different directions. But I cut you off. We were talking exemptions.
Yeah.
We talked accredited investors.
Yes.
Right. What are some of the other exemptions people should be aware of? Now, one other. I'm going to ask this question first, and then we'll go back to that. You talked about these guidelines. Are all these guidelines online? Is this something that I can, get for people and just kind of share? Are they PDF documents, or what are these guidelines that people?
Yeah. The National Instrument for Raising Funds. I believe it's 103. Correct me if I'm wrong.
NI 103.
NI 103.
Okay.
I've given that guy a good read a number of times to make sure that I'm on side with it.
Just before bed, always.
Yeah. It's give that a good read here. It's all laid out in there. If there's parts of that are confusing to you, again, there's consultants in this space, or talk with somebody that's done it before and get clarity around that. But there's the accredited investor exemption. There's a friends and family exemption is another. And
fairly self-explanatory, right?
Yes, and the idea is they'll be a little bit more forgiving if things.
If it's mom that's making the complaint, it'll be a little bit of more forgiveness
if things go wrong. Which is a good avenue. I was going to say between you and me, but there's a camera here.
Between you and me and the several thousand other people watching.
I've always struggled raising capital from friends and family, and it's not because it's hard to do. It's because it changes the dynamic of your relationship and.
I have a family member that has not talked to me because a deal didn't go so well. It went sideways. It lost all its value, and it was in a market that had some significant downturn, and it's not there. And I have a family member that hasn't talked to me since. Yeah, so it happens.
Wow. Yeah, money can be a very emotional thing, and that can be an advantage of going and I mean, you don't want to lose anybody's. You don't want to lose anybody's money. That's a really hard thing. I learned that one early on. But when it affects your family relationships, that's tough. So it's an advantage really of going out and raising capital publicly, because I found a couple of things. Number one, it's not like you care less about those people. You care deeply about your clients, but you're not seeing them on a day-to-day. You're not together for Christmas dinner. And even if it's not even if things are just going bad too, Russ. When things are going good and everybody wants to talk about, memories of the last year's family vacation, and you're sitting there talking about how the cash flow is doing on your deal. It just even when things are going well, it changes that dynamic. So something to keep in mind as well.
If you think about non-friends and family, the nature of the relationship is a financial relationship. In essence, you may know them quite well. You may get to know them really, really well, but it's your relationship is not blood. It's actually based upon business transaction. Yeah,
because the nice part is if it's a business transaction, what I really try and do is get clarity for my clients, because if I'm working, and the majority of my clients are accredited investors, so they don't get there by being poor at what they do. Usually they're quite successful in their ventures, and they're quite sophisticated. So my job becomes to build trust with them, so that when I give them information that they believe it, and they can go and they do that through verifying it. Usually sophisticated investors do that, and then really your job just becomes to communicate. Give them the information they need to make a decision, because they want to make decisions. These people haven't gotten to where they are in their lives by not making decisions.
Right. Yeah.
They're very good at doing so. So your job is really a job of communication. And the problem with family sometimes, or when people get too close, is they kind of forego that whole fact checking, due diligence.
Yeah, it's little Johnny, so we just have to do it.
Yeah, so while you can be good friends with your clients, they tend to go and actually vet the deals themselves, and I very much encourage them to do so. And I think sometimes part of the problem with family is they don't do that. If they did do that, they may not, those relationships may not get strained as much.
Right.
But when someone comes to you and they just hand you a check, and they don't know what they're handing you a check for, that should be a red flag. That should be a red flag for you, or to at least make the effort to go sit down and make sure they're coming in with eyes wide open on what the deal is. Because I've had situations where I inherited a book. I inherited a book of business, and this book had a number of sales have been made to clients in this book, and when you start fielding the phone calls, you'll start hearing things like, this person promised me this, or this person promised, and I was like, I hope they were never promised anything. It's not a word that, it's kind of like promised and guarantee. These are words you just
don't use. Ixnay on the promise.
It's just a no. And if you sell them the right way, and everybody comes in with eyes wide open, whether it's a family member, but especially if it's a family member, make sure they're coming in with their eyes wide open, because it always surprises me. And on the whole, our deals have performed quite well. I'm very pleased with how the deals have performed. But every once in a while, you'll have a deal that underperforms. It happens in this business. And if you've been clear throughout the whole process and you've raised in the right way, I'm always blown away by how much responsibility the investors take for their own decisions. Yep. And they know that it wasn't you going and pushing them to make a decision. It's everybody's working off the same set of information. We're all trying to make that set of information as clear and accurate as possible. And if you do that, if you want to be in this business for a long time, that is huge.
Yes. Well, your reputation's everything, right?
You got it.
Accredited investors, friends and families. What are some of the other exemptions in there as well? Yeah,
there's another. So when you're going and raising funds, you have something called an offering memorandum exemption. You may have heard that term as well. An offering memorandum exemption is used when an issuer, somebody that's making a deal, wants to be able to raise funds. Typically, wants to be able to raise funds from non-accredited investors.
Okay. Yep.
And what an offering memorandum is an additional disclosure document that the Securities Commission deems. If you're not an accredited investor, you're not a sophisticated investor. If this offering memorandum provides additional disclosure that gives these people this group of investors more information to make a decision, more disclosure.
Okay.
It's a little bit closer to that prospectus level or that public level of disclosure. So that's what allows non-accredited investors to invest in these deals.
An OM, so look at me using the lingo, offering memorandum. That's a fairly expensive document to get created.
Yeah, it can really vary depending on who you use.
And if you've done it before, if you're starting from scratch versus if you maybe have done one or two before and things like that too, right?
Yeah. So an offering memorandum, so your legal fees for setting up the offering memorandum, typically you set up a limited partnership agreement at the same time as the offering memorandum. But the offering memorandum, you're looking in the neighborhood on the low end for just the lawyer fees, kind of $10,000 to $20,000, to the high end upwards of $70,000, $80,000, $90,000, $100,000 to create this document. And then it's not just the upfront costs, because you also have to go and get, when you have an offering memorandum, it triggers a requirement for audited financial statements. Upfront, you have to get an opening balance sheet audit. And then in addition to that, it's annual audits. And those annual audits, depending on the complexity of your deal, kind of start, let's call it in the neighborhood of $20,000 to $30,000 per year. So when you're raising money from non-accredited investors, and part of the reason you'll see people only raise from accredited investors on many occasions is because the offering memorandum does add this extra element of cost, not just upfront, those upfront costs of anywhere from $25,000 to $100,000, but in addition to that, operational costs of $25,000 plus per annum for the accountants to go and do the audited financial statements. So if you're going to do the offering memorandum, they tend to be on larger deals.
Yeah. You're not raising $240,000.
No, it makes no sense. It makes no sense. It really makes no sense. So you're going to see, I don't have, there's no magic number in my mind, but the number that comes to mind, maybe $5+ million that you're raising and earning a pretty decent rate of return, including cash flow. On that, to be able to go and fund those auditing costs. Okay.
Accredited investors, friends and family, offering memorandum. Are there some other ones? There was business associates. Is that an exemption as well?
Yeah, it's usually lumped in with the friends and
family and business associates. Okay.
And business associates there. And again, it's one of those ones that you can go and find an exhaustive list on National Instrument.
And I imagine the last level would be the offering memorandum, because that kind of covers everybody. Right after that, or is there another level of exemption from there as well?
There's a few other exemptions.
But we're really getting out there, and maybe one in a million people will need it.
Russell, right? one of my first hires when I started Hawkeye was a chief compliance officer.
Oh yes. Of course it is.
And it really comes down to what you're good at, because again, it can be very intimidating to go and do these things, and it's the question, because anybody can learn it, anybody can do the compliance side of it, but I know a lot of people it doesn't light them up, and if it doesn't light you up, you can't just not do it. It has to be done.
Yeah, the governance and compliance is absolutely huge on that end. On when you start getting into, let's put it this way: the bigger the business, the bigger the deal, the bigger these things, and the phone rings. So that's a good place to actually do a timeout right now. All right, so the phone rang. Wasn't anybody important? Hey, you know what? Actually, CRA has a warrant for my arrest, and if I actually go bring them iTunes gift cards at the local Walmart, they'll let me off the hook for my warrant for my arrest. So go figure that. So I hope you've never had that phone call.
Better get those gift cards.
You better get those gift cards right away.
That's how to raise funds.
That's right. You scam people. You get people that phone people and scam people to get gift cards at the Walmart parking lot.
It's so sad that it works. if they can raise money doing that, anybody can do it.
But we digress. So. We've talked about the exemptions, and there's one that's not applicable to everyone across the country. But it's one that I've heard a lot, and no one's been able to really give me the definition of it. It's called the Northwest exemption. Who's that applicable for, and what is that about?
Yeah, the exemptions we've talked about so far have been more for on the investor side. What is it that qualifies an investor, or what exemptions can an investor rely on to actually participate in these deals? The Northwest exemption refers to an exemption that a person receives to be able to legally raise funds, particularly in and this is the part where if I get it wrong again, go and consult somebody else, because I'm not your expert on it. But particularly in BC, Alberta, and Saskatchewan.
Manitoba, or does it stop there?
No, not Manitoba.
Sorry, Bomber fans, you're not included in this.
Certainly not Ontario, and things are changing. And what it allows some people to do, if you qualify, and that's the big question. It's the if. Is it allows you to raise funds using as long as you're bringing in people that are able to rely on one of these exemptions, the accredited investor exemption, the offering memorandum exemption, as long as you're bringing investors that are able to use one of these exemptions to come in and participate in the deals, it allows you to go and help raise funds for those deals without being registered.
And also not a direct ownership position in it, or do I?
Yeah, so it's very important that you go, and everybody's situation is different here. But three big I'm going to call them three big pillars for using the Northwest exemption. Number one, you can't have ever been registered in the past.
Okay.
If you were ever registered, and if you're wondering what does that
mean? What does registered mean?
Yeah, you can't have ever worked with if you've been mutual funds licensed, or if you've been a stockbroker or a financial planner of any kind.
Broker?
Mortgage brokers typically not would not be a registrant. But what you can do a couple of things here. Number one, you can go on to the National Registrant Database and go and check whether you've been registered. Now, if you were registered before, forgive me if I get the dates wrong, but I believe it's around September 2008. That won't be. It won't appear on there. The records are only after 2008. Right. The best way to do it is to go and talk to the Securities Commission in whichever province you think you may have been registered in, and so you can't have ever been a registrant.
Can't be registered. Okay, registered.
That is key. The number two is the question around giving advice or suitability or anything with regards to whether somebody should do something or whether it's a good. You don't do it. You steer away from it entirely. Is the general rule that will keep you out of.
So really, you'd be just presenting opportunities without giving any advice on what people should or should not do.
Yeah, it's really difficult to navigate because there's no real specific guidelines around like clear yeses or nos, and when that's the case, you try and err more on the side of caution. But anytime you're getting into that language of what somebody should do, or I think this is a good idea for you, anything that implies that somehow that this might be suitable for that person, you want to steer clear of entirely. You're not registered to give advice,
right?
And you have to be very careful about perceptions of giving advice, especially again, these usually come up if things go wrong.
Yeah, I imagine that'd be almost like a he said, she said, in essence. So it'd probably come back into documents that have been transacted, and your paperwork, and do you have disclaimers and
very much,
a lot of that kind of stuff.
Very much.
Okay, so it can't be registered, or it can't be a registrant.
You can't have ever been a registrant. Yeah.
And you can't give advice.
Can't give advice, and then you can't act as a trustee, or you can't receive funds on behalf of the investor. Somebody wants to give you money to go and put into another deal. That's a no-no.
So does that mean that you can't? The deal can't be yours, or it has to be another entity?
That is correct. Actually, the deal cannot be yours. And again, it's important here, Russ, because it gets complicated pretty quickly. And I hope nobody's making decisions based off of what I'm saying here today. But from my experience, if you are in control of that money because you're managing the deal, and you're getting paid a finder's fee for that deal, you can control. There's certain criteria here that they're looking for here. So you can raise money. You can be, for example, if you have a limited partnership, general partnership structure, you can be a general partner and
have shares in it.
That is my understanding. Again, it's very, very important to you, and make sure that this applies to you. So it was no, they can never been a registrant, no advice, and then the third is make sure you're not accepting funds. And there's a few others as well, but go on, just like the exemptions, go on and read the national instrument.
Those would be the big three.
Yeah.
Okay, so suffice it to say, it's complex. right? And don't be scared of complex. Like, embrace it, because quite honestly, if you embrace it, you learn it, you figure out the rules of engagement, you actually will be afforded opportunities that people will not actually, the people that have not embraced the complexity and learning it, they'll just complain. And if you've learned it like you've done, you now have completely new, you're almost in a blue ocean with very few competitors, because you've taken the time and effort to learn all this kind of stuff, right? Yeah. Like you're just almost like a very small industry of almost one or two that that I'm aware of, right?
Yeah.
So speaking of that, let's change gears. So and I could be wrong, so don't be embarrassed at all to correct me, because it happens every day. You're what's called an exempt market dealer. Is that correct?
Correct.
Okay. So an exempt market dealer, what does it take for somebody to become an exempt market dealer? And then you've now created your own wealth management firm. Is that safe to call it wealth management, or is it a? Yeah,
it's more of a, so it's called exempt market dealer. And what our model is, at least for the time being, is to go and raise money for third-party providers of product. So we're not directly holding the accounts with ourselves. Funds go directly from the investors to the deal makers or the issuers. Yeah. So in the sense that we help manage people's wealth, I suppose. Yeah. Yes, that's the case, but we don't directly hold the assets.
So you've gone out, you've taken the time, you've educated yourself, you've gone through obviously a criteria process and testing process and certification process. Maybe just give us a little quick snapshot of what that entails, because there might be, and I'm not trying to create more competition for you, but
no, it's not.
What would the process of somebody have to do to become an exempt market dealer?
Yeah, you go through a pretty rigorous application process. You have to create a certain number of documents. You need a policies and procedures manual, a code of conduct manual. You have to create your know your client questionnaire, your documents, to make sure that you're asking the right questions to determine suitability for that client. You create your corporate structure, and you have to get an audit for that, an open and balance sheet audit for that structure as well. You have to fund that structure with at least, tends to be around $55,000 to make sure you're maintaining a certain amount of working capital in that company at all times. At least those are the rules in BC. And again, go and consult with your lawyer on what you think you should have in there. And then on top of that, you need a few key roles. You need someone to be what's called
cinnamon roll, jelly roll.
There we go.
Sorry.
Sounds good. You need what's called a UDP, or an ultimate designated person. This is the person that is in charge of making sure that you comply with all of the regulatory requirements. And then you've got another person. Sometimes it can be the same person. It can be a one-man show, but I much prefer to have somebody else have this role. You have what's called a CCO, or Chief Compliance Officer. Right. So they're not the one ultimately responsible for the compliance in the firm, but they're the one that monitor all of the compliance in the firm, and it's their job to talk to converse with the ultimate designated person to make sure that compliance is being.
So you'd be
taken seriously in the organization.
Classified as registered? No.
Yeah, you're registered. And then that process of going and creating all the documents and going through that, first of all, go and get somebody to help you go through that process. There's a number of filings that happen, and I had somebody help me through that process, and it really smoothed it out a lot and took a lot of weight off my shoulders on that. The process takes, I can hear, from as little as maybe 3 months, because once you submit your final application to the BC Securities Commission with all these documents and your audited financial statements and everything, they always come back with some questions. Then you have a back and forth period there. So as little as 3 months, and I've heard it take as long as up to 2 years as well. And I should also note that at some point you have to decide which provinces you'll get registered in. So you have to go and make sure that your company is registered to do business in each of those provinces that you're planning to raise funds in, and then you have to go through each securities commission as well. They have to approve. Now they piggyback on each other. So if BC approves it, the chances of everybody else approves it here. Ontario has their own independent process right now, so they approve you separately.
So suffice it to say, you've taken the time and effort and time, lots of time, and financial investment that you had to put into this as well in order to get to the point where you essentially are, when it comes to raising capital from the public, you have dotted your I's, crossed your T's, you've got your seatbelt on, and you're ready to, you're loaded for bear.
Correct. We've been out raising funds for a number of months now.
Okay, so I'm going to run down this question and stick with me for a second. Guys, this is going to help you. So let's say and is there a threshold of amount of money that makes sense for me to come engage you with first? Is there kind of a threshold that capital needs to raise? Because that'll determine the story I'm going to paint for you as well.
Yes.
There is?
I would say yes. So I'd say a couple things here. If you're an investor and you do deals and you're saying, maybe I should go and consider engaging in EMD, I would ask myself a few good questions.
Well, what would those questions be?
Number one, I would say, do I have a really solid business model and product?
Yep.
And be brutally honest with yourself. Because if you don't have a really competitive product out there, and go and ask others, ask people that'll tell you, not the ones that are your cheerleaders, go ask the ones that'll tell you the truth, that if your product's competitive. Because if you go to an exempt market dealer, and there's a number of them that you can approach to do your deal with. If you go to an exempt market dealer and you don't have a very good product, it might be a red flag if they start making promises about what they're going to do for you.
Their butt's on the line if it's a little stinky.
Well, it is, and what I've noticed as well, a very common practice in the industry is to collect a large amount of whether it's due diligence fees. So if someone goes to an exempt market dealer, they may say, hey, you know what? It takes me a while to go and do due diligence on your deal. So it's going to cost you X number of dollars. Maybe is it $10,000, $20,000, $30,000 to go and do due diligence on your deal. And then we expect a marketing budget to go and market your deal as well. So what you want to make sure is you want to do your homework on the exempt market dealer, because if you don't have a good product and they're making promises that they're going to raise money before they've done the due diligence on your deal, like if they're not doing their due diligence on your deal before they make any kind of commitments or promises, there should be a massive red flag for you. And especially if on top of that, they're charging you due diligence fees and finder's fees, because they might just be motivated to go take your $30,000, $40,000, $50,000, tell you that they're going to raise you X number of dollars. And really the product just kind of goes and sits there and they don't ever actively promote it. So two things here. Number one, make sure you have a good product, because if you're going to find a reputable EMD, they won't take your deal if it's not a good product. Right.
They wouldn't be able to sell it.
They wouldn't be able to sell it. And if you brought it to me and I said, you want to know what? I think you need a little bit more of a track record. You need to go back and rethink this a little bit, and then come back. And do you come back in 6 months? Do you come back in a year? But our brand is we want to bring the best opportunities to investors. So you don't just let anybody in the door.
Well, that's why you're Hawkeye wealth, right? You're not Magpie or that kind of wealth. You're Hawkeye wealth, right?
There are a few reasons behind the name. Maybe we'll get into that in another interview. But again, those two things. Be good. If you're good, you'll attract a good EMD. And if you've got a poor product, find out if you have a poor product or a good product, because if an EMD is offering you a lot and you're not so sure if your product's very good, I think that's a big red flag. So the key really becomes get yourself a track record before you engage. And so when you say you're looking for larger dollar amounts, it's certainly not you're not coming to an EMD for your first deal.
Right. Yeah.
You've got a track record and you've done this for a little while.
Okay. So let me perfect context for the question I'm going to ask. So let's just say a bald-headed real estate investor who knows Justin is looking to do a 28-unit apartment conversion into condominiums. Done the work, the numbers are coming in. There's some good margin to be made to condominiumize and sell them out as each individual units, and got commercial financing, got it all lined up, got everything crews, all the work, everything's ready to rock and roll, and I'm about $2.5 million short for the purchase and maybe even some renovation funds, right? So I need to raise $2.5 million. I can go do it myself, the old-fashioned way, potentially, of all the things we talked about before, which is good. Or I could which would be take a lot of time, and I'm doing other things, or I could come to you. Would that be something that you would entertain, or how much would it cost me, or what is the process? Would you want to work with a guy like, let's say I passed all your diligence tests and all those kind of things?
Sounds like a scoundrel.
Scallywag. The scallywag. Is that something that I could come to a guy like you and we could work something out, or what would be the process?
Well, it would start the conversation. Certainly, what I've found is I don't think that's the ideal context or the ideal scenario to be approaching an EMD on. When you really need money, it puts you in a bad negotiating position.
Right.
First of all, but more importantly, when I'm looking at that, I say, okay, well, this person is going to need money and they're going to need it quick.
Okay, let's say I'm just in concept. I have 5 opportunities. I could do the deal or not. I'm not in a panic or whatever. I'm looking at my options. I could go raise it myself, or I could talk to you.
Get the ball rolling on the relationship. I always tell people that the due diligence on the deals, it happens pretty quickly.
Yeah.
If you have a deal, and wherever your deal is, here, Calgary, Edmonton, the US, you can hop on a plane, you can go through, you can check all the numbers, view the land or the property or whatever it is,
Let's just say I'm good to go. It makes rock solid sense. I'm ready to put it out to my people that have money, or I want to engage you.
Yeah.
What's the process?
I'm very slow to onboard issuers.
Right.
Very slow.
Okay.
In this business, if you want to be in the business of raising capital, you need to protect it.
Yep.
That is your first priority is protecting it, and then it's performance. Those two P's here. You protect it, and then you grow it. And that due diligence process, when someone, an issue, a potential issuer comes and approaches us, that process takes time. So my default, and we've got a lot to lose if a deal goes sideways. My default is to say, hold up.
Okay.
Let's again, the due diligence on the deals is measured in days and weeks. The due diligence on the people is measured in years. So if you want to go and raise money from an EMD before the concept stage, before anything, go and meet these people. Go and get to know them, build those relationships, because any exempt market dealer worth their salt is going to put you through a pretty rigorous process.
Okay, what is that process? Okay, let's maybe this isn't fair. I'm trying to get an analogy that could understand. Let's say I already own the place. I've got the money. I've already did, and what I want to do is I actually want to pull out $3 million to go buy another one. And I want you to raise the capital on a property and an asset that I already own, right? So then I can take that capital and go buy the next one. Now, and I totally understand it's going to take time and it's going to take diligence, and you're going to look under the hood and you're going to do the sniff test. You're going to go through all that kind of stuff. What's the process?
Yeah, you're going to go in. You're certainly going to comb through all the numbers. And the big underlying assumption on this, Russ, is you trust the person.
Yeah.
It's very much, for me, the competence is very much secondary to the character, because, and especially we've been in the Lower Mainland here for a long time, and the market's done. It's doing a little bit of this now, but for the most part, it's almost been hockey stick performance in this market. And there's a lot of people out there that have I believe a false sense of confidence in their abilities. A rising market covers a lot of sins. So really, my first thing is figuring out what this person has gone through when the market hasn't performed. I think that's really what's revealing of a lot of deal managers. So
the ability to execute as a team.
The ability to execute and the ability to execute in unfavorable market conditions is a must. So that's really where I would start. So I know we kind of talked a little bit about the deal, but my start is just not where I start my due diligence process, and that's why it takes longer.
Right.
You get to know these people, and you don't just get to know them. It's just, you know how this is, right? We're in a small city.
Yep.
You talked to a couple of people and said, hey, you should interview Justin. That's how we're here today. That's why I'm here today. You've got, like you say, you've got one reputation, right? And you can find out very quickly what Russ or what anybody else is about by going and asking 10 very well-connected people in this city. Okay. Not very hard to do, but once you're comfortable with that.
Yeah, so you've searched out everything, and we're 6 months in, and we've danced and we've hugged and we've sang Kumbaya and beat drums, and you like what you see, right?
Yes.
Work with me here, brother.
Yes.
I'm teasing.
Certainly. No, you do your due diligence.
See,
you do your due diligence on the deal.
This is how tough this guy is. He's already doing it. We haven't even got a deal in place. He's already putting me through the ringer. That's the quality that you want of a good EMD. Right?
You do your due diligence on the deal, and assuming the character and the competence and everything is good. Our questions, we ask a variety of course, we go and do our technical analysis. It goes through. You've used your assumptions. We'll use our assumptions. Do the sensitivity analysis, and that process, if you have competence, shouldn't take. We're talking weeks, maybe months here, but usually that can be done in days and weeks. Certainly, you would look into doing the deal. Another thing that an EMD will look for, if you're going and you want to raise money from me, and let's say you're looking at doing multifamily in Canada, and I've already got an issuer that I have a very good relationship with that's doing multifamily in Canada. That might be a little bit harder sell for that EMD. So also maybe as a person doing a deal, go get a sense for this exempt market dealer, what their focus is.
Well, I'd be doing my homework on you too.
Do your homework. Absolutely do your homework on us, and go and find out what deals the agents are promoting, because you can. The top might be telling you one thing, but the agents in the company might have their go-to deals, and it might not be yours, Russell. So
I understand.
So find out if there's a fit in their shelf for your product.
So the term shelf is a product that you have to sell to your investors.
You got it. So if we've got a shelf of potential opportunity,
retail store,
it's like
pull out Russell's here, pull out this person. Okay, so
you got it.
So I passed all the tests. We're on there. In order to get onto your shelf, what has to happen?
What happens? So you end up doing an agency agreement. It goes through. It lays out who covers what expenses. It goes and lays out what compensation is for the exempt market dealer. In this business, and I think it's something that the whole industry can do better. Is it needs to get lighter on. It needs to get lighter on fees. And I think a big part of there's a big cost in compliance, and there's a big cost in operating these companies. So what you'll tend to see a lot of the exempt market dealers that are having more success, they're going more towards the more sophisticated, more accredited investors, just because on a per client or per dollar raised basis, you're just a lower cost base that allows you to go and charge lower fees, and those lower fees then in turn allow you to go and attract higher dollar investors. So that's what you're going to do. You're going to go through the agency agreement here. You're going to see finder's fees. They range. You're going to see them maybe 4 or 5% on the very low end for capital raised.
4 to 5 on. So if $1 million is needed to raise, it'd be $40,000, $50,000.
40, 50,000 on the low end. On the high end, you're going to see getting closer to that 8% mark.
Do you pay the marketing fees to go out in that, or do I have to fund that as well, or what is that?
So the way it works for us at least is the investor directly pays their funds to the issuer, and then the deal pays out the issuer would pay out the funds to Hawkeye Wealth. Now we can get into the nuances of who's paying. Every once in a while, I'll see a marketing piece say the issuer pays the finder's fee, and I always laugh a little bit when I see it, because there's one person that pays us for the value we add, and it's the client.
Yes, yeah. It's no different than if you're buying a house and they say, well, the seller's paying. No, it's seller's paying the realtor's commission. Well, no, it's the buyer's money that's going to pay the seller's commission, right?
Yes. So I try not to get too caught up on who's paying it.
Yeah.
It's a question of, am I adding the value to get paid what I get paid in this business?
So at the end of the day, it costs money. There's first of all, there's diligence costs.
Yeah.
Right. There's a portion of the capital raise that has to go to the person that does the work.
Yeah.
There's I probably would have to put together a website and collaterals and all that kind of stuff, and selling materials, or is that the EMD?
All negotiated as per the agency.
Okay.
As per the agency agreement. So on the expense side, you've got a few different expenses. You've got creating marketing collateral. Yep. You've also got just in general marketing costs, whether it be trade show, if you're going to do online pay-per-click or Facebook advertising, or however you're going out and generating those leads, and depending, it's give or take in different areas as well. There's also the aspect of exclusivity, whether they're going to have exclusive access to raise funds for you or not.
Right. So I'm actually here's what's happening with a lot of these interviews is there's just so much to cover, and there's just such an onion and so many different layers. I honestly think that there's a conversation that you and I can have about just truly the marketing end of things, of how do you go out and attract, most people won't be out public marketing and things like that, but what are some of the practices to go out there and attract things like that? That could be a wonderful conversation. I think there's some that can help you out there too as well.
Way more fun than talking about
exactly. So I think that could be the next conversation.
Yes.
So suffice it to say, in order to work with a fellow like yourself, or a company, an EMD firm like yourself, it's not a pull one out, call them up, and next week we're doing business together. It's a process. It's going to cost some money. But number one is I need to have a good product that you can actually sell. And, I need to have, you got to like the cut of my jib, and I got to have a good track record and have a proven system that can actually fulfill upon the promises.
Correct. And right? you should expect the same of any EMD that you engage.
Right.
Do your homework.
So before we do sign off, and I got a couple of final questions I do want to ask here as well. So some people might be watching this and might go, you know what, that's right up the alley I'm looking for. I guess I know the answer to this already. Are you looking for some new clients?
Always.
Always, yes.
Always.
How would somebody get hold of you?
Go to our website. It's hawkeyewealth.com. Hawkeye, like the eye of a hawk.
Yes, hawkeyewealth.com.
Hawkeyewealth.com. We have our phone number on there, as well as the emails for everybody on the team are on there.
Are you also open to, you mentioned before about a consultant, that sometimes there's some people doing some consultant work on people to this. Do you do that work as well, like a consultancy role with some people?
Not directly, but if you reach out to me personally, I'm happy to connect you with the people that I think are excellent in this industry, and be that resource for you.
So we're back. We just absolutely burnt through another battery in the camera. Justin's over here just dropping one bomb, truth bomb after another. So we've covered lots of ground. We've covered, the whole conversation around fear of raising capital. We've covered all the how does somebody scale and start the process of going into raising public capital, and how do you protect yourself. We then start talking about the whole realm of the exemptions. We talked about the exempt market dealer, and highly recommend, guys, you reach out to Justin. If you are in that space where you're looking to outsource the raising of capital and you got a fantastic product, talk to Justin. He's got a track record. And I just know some of the people you've worked with, it's just results speak for themselves. So make sure you reach out to him. So what I always want to do is just kind of on the final, I always want to just kind of, I should have the fireplace going, but it's in the middle of summer here. And we have a little fireside chat. And the last part of the segment is we just talk about what would your advice, so you've been in this business for a while now, you've seen some good, the bad, and the uglies. What advice would you give to somebody watching this? The people who are going to be watching this are going to be anywhere from somebody who's just raising their first 100,000 to somebody who's probably going to be raising 100 million, right? So there's a wide gamut. But there are some fundamental truths. What would be your best advice and best tips you would offer people that are watching this, that in the realm of raising capital?
I'll start with the philosophical.
We're going deep. Hang on, let's get out the sitar and
fireside chat.
Yeah.
No, I really do. I believe it starts with belief. Believing in yourself. When I told you a little bit about the story when I got started in this business and was able to raise enough capital that month that my wife allowed me to continue doing what I'm doing. And shortly after that, you realize that you can't just do it for 1 month. You need to. There's a lot of months. There's a lot of months that follow that. And for me, I got started helping investors participate in individual condos, townhomes, houses up in Northeast BC. And I remember I was working on a project with Dave Steele, and I'd sold my first property the month before, and we were doing the sales meeting where the developer's trying to get an idea as to how many each agent are going to sell that month so they can forecast. And just previous to this meeting, I'd been walking again with my wife, and I said, sold one property. I'm like, I bet we could sell two, double it up for the next project. And we were in the sales meeting, and Dave's going around, and everyone's telling how many units they're going to sell, 5 or 7 or 8 or whatever it is. And I'm sitting here thinking, 2 is the number in my head. I'm like, I can't say 2. It's going around where the heat's on. I'm like, so it comes around to me, and what comes out of my mouth, I'm like, 4. And I say it with some gusto, with some energy, like 4. And I'll never forget it. Dave kind of just drops his head a little bit, and he's like, Justin, I'm a little disappointed. I thought you were gonna say like 10. and my heart just sank. My heart sank, at first, and then my second thought was, well, I'm glad I didn't say 2. This is the reaction I'm getting with 4. But I went and I got to work. Yeah. I went and I picked up the phone, and we're in a business of if you do A, you get B, and we spend our lives trying to figure out exactly what, to make A better correlate with B. If we want funds raised is what we're going after, we want to make sure that we're doing causal.
Really good focus, right?
Yeah, and I went and I got a little bit better clarity around what things were required to go and make the sales, and what happened was you started to believe, and you sell your first unit, and then you sell your second unit, and then you're getting past your 4 that you thought was a crazy number that you throw out in the middle of the meeting. And I went on to sell 14 units nice. in that project. And it was the first time where I realized that I had such limiting beliefs. And it's not just people that are just getting started, people that are very far along the way. They can get caught up with these limiting beliefs. And one thing that I realized helped me on this occasion was having somebody else realize that I had a limiting belief. Dave telling me that, being disappointed and saying I thought I would say 10 made me realize that I might not understand my ceiling. So number one is go and talk to some people. Go and talk to some people that have achieved more than you have. Unless you're, who's the richest right now? Jeff Bezos?
Yeah, well, maybe I'll have him on the interview.
Yeah. I'm sure he's coming. I'm sure he's coming next week. But go and talk to some people that have done more than you, and work on your belief, because we are awful judges of what we're capable of very often.
Well, you just actually hit the nail on the head of what I'm trying to accomplish at the Raising Capital Academy, is introducing people like yourself, introducing those people that are out there doing the transactions. I'm also introducing people that are doing their first deals to things like that, and looking for some help too. So I 100% believe in the belief and seeing the belief from other people. Yes. So fantastic. Any other?
Yes, certainly get clarity about what you're wanting. Get clarity about what you're wanting to do. I know a lot of people, they don't spend the time to think through their thoughts and think through their actions and create a plan before they go about it. Get clarity around what your plan is, because if you want to raise money in this business, it's a business of clarity. If people out there have money, there's lots of money out there, Russell. These walls are oozing, everything's oozing with money. Yeah.
No, got it.
It's beautiful.
It's beautiful, baby.
There's a lot of money out there, and if you have a good product and you're able to offer clarity about what that product is, the money will find you, because those accredited investors, the people with the money, they want to make decisions. They want to invest. They want to give you their money if you're giving them, a good product and you're clearly explaining what that product is. Yep. So people oftentimes don't spend the time around getting clarity. And actually, that's one thing I was grateful for. This whole process of starting the EMD took me a number of months. It took me about 8 months from conception to having everything launched and raising funds. And that 8 months was wonderful to be able to zoom out of the business. Bird's eye view, I call it.
The Hawkeye view. Bird's eye to get a Hawkeye focus.
Bird's eye view. But zoom out of the business and really get clarity about what I'm trying to accomplish here. Not just for 1 year, not just for 5 years, but for 10, 20 years.
Wow.
Go and create some big goals and get clarity around that. That's number 2. And then number 3, it's gonna sound really simple, but it's really hard. And it's, don't lose people's money.
And then the next one is see the rule before, right?
Yeah, well, we're in the business of building relationships, Russ. Everything we do, what we're doing here, this is relationship building. Every time you go and talk to somebody, you're building trust. You're leaving and every time you build that trust, it takes time. It takes a long time. It takes years to build it, and it disappears. It can disappear like that. So in this business, a lot of people forget that, if you're filling your bucket full of funds, well, what you really need to make sure is you don't have a hole in the bottom of your bucket. And if you can, you're always going to have a small hole in the bottom of your bucket. People that don't like you, or people that die. I don't know. Things happen. But if you figure out how to minimize that hole, and a big part of that is not losing people's money, it just becomes a question of make the calls, have the coffees, make the connections, add the value, and you do that, and you'll add the clients over the years. And as your deals, as they like you, and your deals perform reasonably, they will come back to you. And not only will they come back to you after you get your track record after 3, 4, 5 years, they won't just come back to you. They'll come back to you with their brother, their aunt, their friend John, and that's really how you make it in this. That's really how you make it in this business. If you want to talk about scaling, get a good product, offer clarity, and most growth curves in this world, Russ, they're not like this. Most growth curves in this world are like this. So if you're slowly adding those clients and you're doing performance and you're concerned that it's taking too long, don't worry. One day you're gonna hit this, and you're gonna grow massively. But it gets dramatically set back if you lose people's money. Wow. Vigilantly guard your clients' money.
Belief, clarity, and don't lose people's money.
I call it vigilance, Hawkeye.
Vigilance.
Let's get the other Hawkeye reference in there.
Brilliant. So, and I just wanted to first and foremost, couple things. I wanted to show some appreciation for you to come out this way, come out to the studio. It's an ordeal. Anytime you have to cross a bridge in the Lower Mainland, it's an ordeal. As people know, are shaking their head and agreeing in Vancouver. Anytime you have to cross a bridge, it takes a commitment to get someplace. But most importantly, just your willingness to just share, your willingness to just be open and just open up everything and share some incredible stories. You shared an incredible journey in the process, and I'm just touched and honored, and I just wanted to thank you for coming and sharing everything that you did.
No, it's my pleasure. Thank you, Russ. Really appreciate the opportunity.
Any final words of inspiration for that camera right there? Or let's go on this one over here, that camera right there. Words of inspiration. This is your moment to shine, Justin. You got a moment of inspiration you want to share for people that are just getting rocking and rolling?
I'll pull on a quote. I think it's one that the world desperately needs. And it goes something like this. It is easier to act your way into feeling than feel your way into action. Everyone wants to wait to go and raise money until they're confident enough to go and do it, or they want to pick up the phone once they're full of energy and they know everything's good. Pick up the phone. The energy, the feeling, everything you want is on the other side of your action. And I found that time and time again. So stop waiting to feel something and get out and do it.
That and go on lots of walks with your wife, because you have a lot of clarity when you have that conversation.
Wives are wonderful for that
it's
process.
Funny, one of the last interviews I had too, Mike Ponte, which good friends of both of ours.
Yes.
He said his wife, having a conversation with his wife, she just said, pitch your deal to me. And she goes, well, that's terrible. Right? She goes, well, make sure you just, this and this. So make sure we talk to our spouses, because they're our partners in this as well.
Wonderful assets.
Right on. All right, guys, this is Justin Smith. Thank you very much. An incredible interview here. So stay tuned for the next interview upcoming. Russell Westcott, #JVJedi. Bye for now. I sure hope you enjoyed this in-depth training video, and I applaud you for sticking around right to the very end. I believe in people that show up, put in the work, put in the time, and effort should be rewarded. If you're interested in taking the next step, if you're interested in going deeper and mastering what you just learned about in this training video, I encourage you to check out the Raising Capital Academy. So if you have found that you've received some value from the YouTube channel, or maybe you've listened to a podcast, you're only scratching the surface. That truly is just 1/10 of 1% of all the content and materials that have been created that are waiting for you on the other side. So I encourage you to check out the Raising Capital Academy. There's more than 100+ hours of video content, audio content, exclusive training material for those that are interested in taking the next step, those that are interested in going towards mastery, those that are interested in moving forward with velocity. So I would encourage you, wherever you're watching this video, around this video will be a link where you can check out all the details of the Raising Capital Academy. After you've checked out all the details on that page and you're interested in moving forward with velocity, click on the link that will take you towards the application. This is by application only. This is a community program and is for serious action takers only. So if you want to step up your game, if you have goals and dreams and aspirations for more, if you'd like to make a difference in the financial futures of the most important people in your life, I highly encourage you to check out the Raising Capital Academy. Click on that link and you'll be taken to the next step in the process to see if you qualify to take the next step forward for you. Hope to see you on the other side. Bye for now. Hey, I sure hope you enjoyed this video. If you are interested in moving forward with velocity, if you're interested in being a successful real estate investor, only 2 simple next steps from here. Number 1, below where you're watching this, there will be an opportunity for you to subscribe. And over here will be a hand-selected video for you to keep moving forward. Continue your journey forward. Just click on over here for that hand-selected video for you, and we'll see you on the other side. Thank you very much.